Hi, everyone. Welcome to today's panel, Adapting or Falling Behind, Blockchain in the Face of Global Regulatory Overhaul. My name is Arvin Abraham. I'm a partner here at Goodwin, and we're thrilled to be your co-host today, together with our friends at Worldpay and Ripple. We're going to start with some quick introductions, and then I'll set the stage before diving into the meat of today's panel. As I mentioned, I'm a partner here at Goodwin in our private equity team. I also co-lead our firm's blockchain practice in Europe. And I also sit on the Bank of England's Central Bank Digital Currency Working Group. I'm going to turn it over now to Manoj.
Good evening. I'm Manoj Piris. I'm the Senior Regulatory Counsel at Worldpay, and I support our digital assets Web3 team globally. And I've been in payments for too many years now, I think, mainly with the banks here in London, and also with some of the trade associations as well. So that's a little bit about me.
Evening, Nicole Sandler. I'm not at Worldpay or Ripple, but I still consider myself a friend.
You're definitely a friend.
Thanks very much. I'm at Global Digital Finance. I'm an executive in residence and what they would refer to as a digital policy expert. I sit on the European Commission's, let me get this out in one breath, Regulatory Obstacles to Financial Innovation Expert Group, ROFIEG, thank you very much, which, I don't know if you'll think it's a good thing or a bad thing, but led to the creation of MiCA, the Market in Crypto Asset Regulation. Former to this, I was at Barclays as manager. I was the head of digital policy, focused on retail and wholesale, looking at digital assets, crypto, stablecoins, and artificial intelligence.
Hi everyone, I'm Chris Myers. I'm senior counsel and head of legal for Europe and the Middle East at Ripple. Been in the crypto and payments space for about 3 years now. Before that, I was very much a TradFi lawyer focused on transactional and regulatory work in a number of the usual investment banks, Morgan Stanley, Goldman Sachs, and State Street, and before that, a private practice lawyer at Daily Piper. Good to be here.
And thanks. I'm Andrew Henderson. I'm a Goodwin partner with Arvin, co-lead our European blockchain practice. I have been doing financial services regulation for 25 years and been involved in blockchain and blockchain-related matters since about 2017.
Great. Well, we have a fantastic group of experts to talk to you today. And what are we talking about? So we're at a pivotal place in our industry where the industry has for a very, very long time been clamoring for additional regulation to really give clarity on what actors in the space can and can't do. We're finally starting to see some comprehensive regulation coming out, notably in Europe with the advent of the markets and crypto assets regulation, which is going to be one of the key focus points for today's discussion. And this is particularly topical today because MiCA came into force last June and is being implemented, the first half was implemented in June of 2024, and the provisions around exchanges and wallets will come into force or come into effect at the end of December of this year. So in advance of that, the industry has again been kind of questioning, what do these new rules really mean? How do we comply with them? And we've got a great panel today, some of whom are actually grappling with these issues in their businesses, who can help steer us with some potential answers to those questions. We're also going to think more big picture about the evolving suite of regulations globally or lack thereof, and just do a bit of compare-contrast between Europe and the rest of the world. So the first question is for Nicole, Manoj, and Andrew. So how will MiCA impact blockchain and crypto businesses in Europe and globally?
So just out of curiosity, I love audience participation. So how many of you work for regulated institutions? Okay, so a reasonable amount. So how would it impact? How would MiCA impact? Well, for those that work for regulated institutions, I imagine that it's been quite hard to work in the blockchain space, particularly when it comes to crypto assets, because regulated institutions really like regulatory clarity. There's nothing wrong with that. I've worked for a regulated institution doing this for about 10 years. And one of the ways to move the dial is by making sure that they know what they can and can't be doing. Now, if you're not a regulated institution, it's still very relevant for you because at some point you're probably going to be regulated. And if you're not going to be regulated, you're potentially working with regulated institutions, or by virtue of wanting to do stuff within the crypto asset space, you will be caught by MiCA. And I find MiCA really interesting, and I like regulation, so excuse the word interesting. I find it a really interesting regulation because it's almost like a residual regulation. There's so many different regulations that surround it. So MiCA doesn't cover financial instruments that would be caught potentially by MiFID. And it's only got a few categories when it actually looks at crypto. And a lot of it are none of the above. Like lots of things fall into the none of above category. But what I think it does is it provides regulatory clarity, which means that more institutions may be able to do things within this space. It may lead to a lot of costs. The compliance costs under MiCA are high, but if you meet those compliance costs, you can then go into the EU and work with crypto, different types of crypto. And what it really wants to do is it wants to have a harmonized framework. It wants to avoid regulatory fragmentation. Now, whether it's going to manage that, I'm sure others will potentially disagree, but it lets a business know if they can or can't work in the EU. And then it's your decision if you can afford to do so and if you can meet the requirements, whether you want to do so or not. And I think that is quite a good starting point.
Great. Manoj, Andrew, what are your thoughts?
I obviously agree with everything that Nicole just said there, but I think from what we're seeing in the marketplace at the moment as an acquirer and our clients, who are the ones who are directly grappling with what's going on, the prevailing view that seems to be emerging is they're asking us and they're asking themselves and regulators, exactly what do we have to do?
Yeah.
Like what is involved with complying? We want to comply, we want to be regulated, we've been asking for this, but exactly what do we have to do? And there's almost an element of, I loosely use the term panic setting in, because obviously there are certain for CASPs, the deadlines are looming, and yet regulators haven't published all the detail in terms of how you apply for the license, what your ongoing obligations are going to be. So what's happening right now is an element of uncertainty. Yep. These entities who are not, the bulk of them, certainly the startups, etc., they're not used to being regulated. So they're grappling with how do I embrace this new regulated landscape? And that is the big challenge with this. I don't think there's too much pushback against MiCA because everyone wanted something, and having something is better than nothing than what we had in the past. It's just the way it appears to be implemented at the moment is causing a little bit of tension and angst and anxiety for companies at a business level. We're seeing a lot of our clients talking to us about how do I apply for my license, what do I have to do, these kind of things. And something I'm telling our merchants is you've got to be able to articulate what your business is in a way that a regulator is going to understand without necessarily appearing condescending and patronizing to them. Because as Andrew just said, a lot of these regulators come from a traditional finance banking background. A lot of the business models out there in the digital asset space, they are by nature innovative. There are new business models appearing every other day almost in this sense. So you've got to find a way of being able to articulate what your business model is, where it's going, in order to bring those regulators along with you as part of the application process for your license. And I think that's going to be one of the key elements to businesses in Europe in the coming months as part of getting their license.
Yeah, and that's definitely a challenge when you're dealing with a lot of regulators who have, pretty much across the board, very TradFi focused backgrounds, is explaining how this new ecosystem, which is in some ways similar to TradFi, but also very different and innovative, why certain things that would work in TradFi land don't work in this new world. I want to change the topic a little bit, and maybe we start with you, Nicole. So how does everyone feel about the fact that MiCA is in some ways punitive on non-European businesses and the lack of a third country regime under MiCA? What are your thoughts on that?
Yeah, I mean, MiCA is very much about localization, and that partly goes to the compliance costs. You have to be authorized, you have to be incorporated in the EU. Now, if you're not a company in the EU, you're probably going to find that quite frustrating and expensive. If you are a company that's based in the EU, you're actually going to think that's great because you're already there, you can set up business, and to your point, you've probably worked with a number of the policymakers situated in the different jurisdictions, and particularly the EBA and in the EC, than others. But I was told at 2 a.m. during due diligence once that every challenge is an opportunity. So when we're discussing this as being a challenge, I actually think it's a great opportunity. One, if you're not a company that's set up in the EU, you get to be set up in the EU, putting aside the cost. But in terms of working with the policymakers, it means you're helping shape this industry because they want to learn. They're not sat there saying, we understand all of this. They're actually doing the opposite. They are saying, we need help. Work with us, help us.
We're going to turn to considering some real-world examples under MiCA, and particularly focusing on licensing and stablecoin issuance. And this question is for Chris, Andrew, Manoj, and we're going to start with Chris.
I think stablecoins, as many of you will know, is very prescient for Ripple right now. If you've seen the press, we are in the course of this year planning to launch our own stablecoin, Ripple USD, RLUSD, primarily at first instance from the United States. But as with the intention of stablecoins, they are intended to be, globally usable and globally fungible instruments. And this is the final point I make is the stablecoin rules around MiCA, the black letter of them is very clear, but the implementation of them for stablecoin issuers, and we know the EBA is working on this, and we know the implementing technical standards are out there, is going to be really, really difficult. There is this concept that if your stablecoin is not denominated in the euro, it's going to be subject to certain volume caps on a day-to-day basis, unless it's a spot transaction, and you have to report. If you have to report, and if you are over, 2 million physical transactions a day with a euro-denominated volume of 200 million, you have to stop transacting until you come under that level. The likely reality is that very few stablecoin issuers, once those tokens are in the market, are going to know what the actual utility is on a day-to-day basis, which makes it very, very difficult to report to the regulator. So I think this is the point that a number of the panelists have made, is that MiCA is very well intentioned, and MiCA is very well intentioned when it comes to stablecoins. It's going to need to change at some point because it's going to be very, very difficult to meaningfully comply with a lot of the safeguards that are very well intentioned that the regulation tends to put in place.
So that's been incredibly insightful. I want to drill down into one kind of specific kind of use case of stablecoins post MiCA, and this is a question for Manoj and Andrew. So how can someone with an EMI license issue a stablecoin in the EU post MiCA?
Andrew, do you want to?
I was hoping Manoj you'd weigh in, but I will.
But
I think it's important to take a step back and even pick up on a point that Chris made, because if you just simply look at an EMI, an electronic money institution, it's actually a fairly straightforward form of business. Yeah. So much so that they say you don't have to have a reserve of cash. You can underwrite it using insurance. That's not as silly as it sounds, because actually what the money put in a bank, you just create a debt. These are debt obligations. But what concerns me is that when people aren't always thinking about the use cases completely of stablecoin, which aren't necessarily going to be the same as the use case of e-money. Yeah. So to the point is that as things currently stand, MiCA will say, right, you either have to be an EMI, i.e. you go to the e-money regulation, or you have to be a bank. And again, if you go and look at banking regulation, there is, in any event, a bank can issue money. If you're going to be a significant e-money issue, that's a whole new concept, and starts taking it to banking regulation, they start bringing in banking concepts, the European banking authorities in charge. Then they use the term own funds, which, to really bore you in this evening, is stuff that comes from capital regulation, that a big light shone on it during the financial crisis. You start becoming more bank-like. Mm-hmm. So it really would come down to the question of what your stable coin would look like. But if you're on the simpler end, you're just an e-money institution. But the next complexion of this is this idea, and we talk about the difference between issuing or manufacturing and then distributing. Because the idea of distributing e-money in a normal context is unheard of. You use e-money. I'm not going to use the word utility because it starts using it, but it has a use. Whereas when people start thinking about it as an investment, then it becomes different. But that's the point there. And then in order to then distribute it, this is where you then plug into the second part of MiCA and start looking at CASPs. My reading of it is that it would simply fall into the broad definition of what is meant by crypto asset. So if I'm looking to distribute it, I'm starting to do the sorts of things that in more traditional things a distributor or an IFA will do. This is where it all starts getting mixed up.
And this is what's emerging in the market from what we're seeing right now is the first part of it is how you issue it. The second part is how do you actually get it out to market? And what we're seeing in the industry is a lot of the established current VASPs are looking to get the CASP licensing so that they can effectively partner with the stablecoin issuers. So the issuers need the CASPs. They work in tandem together in partnership in order to issue the coin and then distribute that particular coin for whatever the use case might be. So you could argue that that is emerging evidence of a regulation that is potentially going to work, where you've got two different aspects to, because MiCA is the two main aspects to it. One is the stablecoin side, the other side is the CASP. Here, the industry now seems to be basically embracing that with the different players in it, looking to work together in order to basically do the end-to-end journey, which you could argue is the aim of some of this regulation, and that's how it's supposed to work. So the distributor model is, in the early days now, based on some of the conversations we're having with our clients, is what seems to be emerging. Now, from a legal perspective, the challenges and the issues that that's raising is the stuff that lawyers love, things like KYC. These are the issues that we're now going to have to grapple with, because the law is pretty silent in that respect, because the law, like Nicole alluded to earlier on, is there are certain intentional gaps there to let the industry evolve and create the solutions almost. But in the distributor model, is it the issuer who carries the primary responsibility? Can they pass those down to the CASP, for example? Because the CASP has its own responsibility under its own permissions. What would they pass down to the likes of us as an acquirer, for example, because we're the ones who are bringing clients to the table as well on their behalf? So all of this needs to be worked out.
Chris, on your point, I absolutely agree with what you're saying about it being very hard to implement and maybe a challenge for having a global stablecoin. But when I think about MiCA, I think it's really important to remember why MiCA was created. Like, where did it come from? Why did they suddenly go, hang on, we need to create this harmonized regulatory framework for crypto assets across the EU? Because you're going back to, I was sat in a room, I think it was 2018, 2019, when we were really getting into the weeds of why they were looking at crypto. So more audience participation. How many people know why MiCA came to being MiCA? And it's totally fair to not know. ICOs and Libra, and also a bit of the Chinese CBDC, but essentially they were very nervous about a large technology company creating a global stablecoin, and they wanted to stop it. And if they weren't going to stop it, they wanted to make sure that there was a framework in place that if that did come to exist, they knew exactly how they would want it to be regulated and how to pull it back. So it's very difficult to do a global stablecoin. And actually, I don't like the term global stablecoin because I think all stablecoins by virtue should be able to be global, but globally systemic. But that was one of their aims. So actually, whilst it's frustrating for the industry, and perhaps now they may say, actually, we wouldn't mind this because if it was from Europe, that's promoting what's going on in Europe. Their starting point was, we need to pull this back. And you see that throughout the MiCA regulation. And you see it when you're dealing with the European member states. And I really enjoy working with policymakers. I really enjoy working with the Europeans. I think they've been very forward thinking. But one of the difficulties they sometimes have is across member states, there are different views about what they may want to happen in the world of crypto assets. And that regulation has to also take into account those differing views. And that is sometimes difficult. And I sometimes just think it's quite useful to have the context for why the regulation ends up.
What do we expect from US and UK blockchain regulation post the upcoming US election? and any changes that the new government in the UK will implement. So this one is for Andrew, Chris, and Nicole, or sorry, for Chris, Nicole, and Manoj.
Who should start?
Whoever wants to start, so dive in.
I would say to break it down to both jurisdictions. I think we've seen from the UK, we've seen really positive direction. We've got the Financial Services Markets Bill. We've had the FCA making some hay in terms of what it can develop at this point in lieu of secondary legislation on that front. We're excited to see more come. I think probably the first question that's outstanding at the moment is how quickly is it going to develop now in the context of the new government. I think we can probably all appreciate and recognise that they've got a lot to think of, particularly from an economic perspective, and that development of regulation, and particularly aspects like passing the secondary legislation, might not be top of their agenda. That being said, certainly I think those of us who are, and I think most of us who are in contact with the relevant authorities on a regular basis, what we're hearing in terms of their willingness to stay the course, particularly from the previous government, is positive. So it will be good to be part of that. And I think, just speaking personally on behalf of Ripple, the more clarity that we get in terms of what we can do, that is, again, good for consumer protection, which I think we all realise is essential, but will allow the operators who are already here more clarity about what they can do, but also attract more business to the UK in the general crypto and decentralised space. I'll touch briefly on the US piece. Ripple primarily a US company. We remain a very strong advocate of the development of formal crypto regulation in the US. We think it is essential. As I imagine most people in this room know, Ripple has had experience of regulation through enforcement by the SEC, which we have, we have fought and continue to fight. We do not think it's a productive way of going about it. Mm-hmm. And from our perspective, particularly in the context of the US election, we're willing to work with anybody. Most of this is going to come from Congress anyway, and regardless of the, there's different opinions on who might be more enthusiastic about crypto post the election. Regardless of who wins, I think the industry needs to be there as a partner and really try and draw a line under, encourage the new government and new authorities to draw a line under the idea of trying to regulate by enforcement and really learn from the EU, learn from the UAE, learn from the UK, and say, this is how you can make decentralizing crypto activity a fundamental part of your economy by regulating.
And Chris, I think that's a common theme that a lot of our clients are having right now in the US, which is no one wants regulation by enforcement action. And people are clamoring to be able to kind of effectively partner with an administration and a Congress to kind of take forward regulation in a sensible way in the US. I'm going to turn this over to Nicole now for a different question. So given your involvement with European policymaking, would you see there being more alignment with the EU post a Labour government coming into power here?
Yeah, so I find, when we talk about blockchain regulation, that's a really wide term, and I agree with a lot of what you said. But when I think there's two routes you can go, right? Under the Tories, they were very much, we're not going to be doing what the EU is doing. It was, we're taking a different route. And then actually, the devil in the detail, it wasn't so substantially different. But that was the rhetoric that was coming in. We want to be a crypto hub, and quiet on other things. Labour have taken a different view. They've said very little about crypto, although I think it would be quite an easy win to continue with what's been put in place already. But they have been very pro securities tokenization and CBDCs, and they've been very open about wanting to align to the EU. So I worry for you that, not you personally, but what you were saying, that you will end up having a regulation that is much closer to MiCA than you potentially would have had under a Tory government. What I would hope for, and I don't have an issue with them starting with MiCA, to be clear, I actually think that's a good starting point, because these assets are cross-border, and if you end up having totally different regulations in different jurisdictions, you're already causing a problem for yourself. But I would prefer they looked at MiCA and said, where is it good? Tick, tick, tick. Or where is it workable? Tick, tick, tick. Where is it really, really, really not workable that it's going to be a challenge for us? And that's where they should be trying to make the differences.
Exactly. I think it's a great point.
But I think they will be more aligned with the EU than you would have seen under a Tory government, and from a regulation perspective, I'm kind of okay with that.
Sorry, I've got a question. Do you think that maybe opens the door for, I know we're not in a single market anymore, some aspect of equivalence, maybe?
Potentially.
Yeah.
Potentially.
Which would be great, because then equivalence breaks down the barriers.
Save that, and this may seem controversial. If you look at the consultation that the FCA issued around e-money safekeeping, the FCA would say that the EU regulations are inadequate because it's stricter than the current e-money. It's more aligned with what originated under MiFID, what was tested in the Lehman's litigation. And people often forget this. There's always been this assumption, particularly in banking regulation, that the EU is stricter. Actually, the opposite is true. When it comes to banking regulation, we're a lot stricter here. In fact, there were many who said it was probably better that certain banks could no longer passport into the UK. So I think that's important. That said, on a very technical, and I keep coming back to this thing, you might think, oh, you're an old fart, but I keep coming back to this thing about saying, let's bear in mind that the terminology in MiCA is based on MiFID. And much of our, well, which in MiFID in turn is probably based on English, UK law from like 80s. So it's already there. You've already got, but I think you're spot on about the point that we no longer have to say on principle, going to do that. You have to say there needs to be a very good reason to do it. So I think it's all there to actually say we're a lot more joined up already.
So one more theme to tease out of this, and then we'll turn to the next topic. What do you see as the pros and cons of setting up in the UK, EU, US, or other jurisdictions? And we'll start with you, Andrew. And I think, Manoj, you've actually alluded to some of those pros and cons in discussing choke point. But Andrew, any other thoughts?
No, I think to pick up a lot of those points, I mean, the one thing to emphasize, of course, is that we have a focus on crypto regulation, but there are other aspects that are important. And certainly the treatment in the law of a particular country of a crypto asset is vitally important. If you're an investor, if you're entering a new market, there are two questions you say: what will happen to me in the event of regulators taking action? What will happen to my assets, or rather in the event of a business becoming insolvent? So it's very encouraging when you have the Law Commission, now a crypto assets bill before Parliament, and indeed you have the courts, the English courts, and by extension, Hong Kong courts are making those announcements. So I think that does become important in terms of the actual asset. There are also broader factors. We've had clients come and say, and we've said we really, we're trying to point it towards a particular European country, and I'll say, yeah, but we don't like the employment laws, or the like.
Or the language.
Or other people saying, people don't want to live there because there's not enough entertainment, or whatever the case is. So all of those factors that I think do come into to pick up on those. And we can talk about more particular countries in a while, but I think those are broad and perhaps obvious features, but it's not just about the regulation.
Yeah. Chris, what are your thoughts?
Yeah, I think it's a great question. I think our experience at Ripple is that there are only so many places right now where you can get a license and go into a mature licensing regime. Fundamentally, you should go where you want to be, ideally, and where your business is. I think one of the things that we always consider at Ripple is there are lots of opportunities for licensing, but what is the actual sort of financial and capital and resourcing value of going there? There's probably we're interested in very obvious markets, and that's where we want to be, including here in the UK, the EU, and as many of you may have seen this week, we got our in principle approval from the DFSA for our financial services license. So I think that's fundamental.
Congratulations.
Thank you very much. Go for licenses where you want them, and then once you've identified where you want to be, it is, I think this is your point, the feasibility of being there. Yeah. If you look in the EU in the context of the MiCA, you're kind of spoiled for choice. You take the EEA, you've got 30 jurisdictions. In theory, you can go to any of them. In reality, you can't, because they're all empowered to give you an EMI or a VASP, but not all of them are going to want to. And we know that there are jurisdictions which are more in the forefront of trying to really attract businesses, France, Luxembourg, Ireland, etc. But there are those considerations of how easy is it for me to attract talent there? How easy is it for me to employ people? How easy is my relationship with the regulator going to be? A lot of the global companies,
Just to add to that, what I say is from our experience, I don't think there's any one particular jurisdiction that is the standout at the moment. It's very much a trade-off. And so it comes back to focusing in on what your business actually wants here and now and what it wants down the line and seeing what opportunities lay ahead for you in a particular jurisdiction. There is, I don't think, from a regulatory perspective, one standout right now.
Europeans would politely disagree with you, but
They may. Obviously, there's going to be short-term pain with MiCA next year, at least, with the fragmented grandfathering. But I would probably agree with you from post-2026. If we were to have this conversation in 2026, you'd probably say the EU is the leader, having gone through all that process. So at the moment, I would say that's the position. No one standout.
Yeah.
EU perhaps slightly more advantageous than others.
Even compared to, say, I don't know, the US?
From a regulatory perspective, or
Well, from a regulatory perspective, I mean, we've talked about some of the disadvantages in the US, but kind of in a general setting up a business perspective.
well, obviously, setting up business, the US economy is designed to help you set up a business, but it's actually about being able to transact and conduct your business, and that's for digital asset providers. That's the challenge.